Well, hello, Switzerland. I'm L.A. Little, and welcome to this week's edition of your neoclassical TA wrap for the Swiss market. Here at NeoTA, we go where others fail to go, and that is we look at supply and demand on the charts to determine direction and timing on all time frames. So let's sit back here, take a few notes, and let's take a look at the markets. What happened last week? Last week, of course, was a down week, pretty much blood red across the sectors here. Small caps did a little bit better, but a pretty big pullback pretty much across the board. If you look at the whole year, small caps almost break even. Everything else down anywhere from about 8% to 9, almost 10%. So it's been a pretty tough year so far here in Switzerland. Now, if we drill down a little bit here, we can see where the rotation was to the safety sector, right, going to the utilities. Elsewhere, some pretty big hits, in particular on the technology sector, right, 5.4%, kind of following what the U.S. was doing, but also some good hits both in healthcare and the consumer services. So a little bit of rotation of safety. Outside of that, not any kind of safe area for the market. If you look at it year to date, you've got three sectors that are leading. You've got the industrials, the consumer services that we were just talking about, and then the utilities. So overall, big moves there comparative to your healthcare sector, which has just been demolished, but in particular the finance sector with all the problems with the QE, with the debt structures as the way they are, and technology itself hasn't done too well either. So you have a very divergent market. Small caps doing better than the large caps. Inside the sectors, you've got safety with the healthcare and the utilities, and a little bit of the industrial mix as well. So if we move to the charts, let's take a look at those. There's a few things of interest here that we should be paying attention to. So if we we'll start with the large caps. The large caps, you had a swing point high that was broken, right? It's the green arrow here tells you that you got over the swing point high. And so this little H that you see here, right, just telling you got a swing point high. You get over this guy. When you do that and you come back, and in this case you come back within 6 bars, you try to get to the back side of that gap. And so in other words, as you come up, you break the swing point high. That was the break there. Then you come back into it. If the bar is wide, you can come all the way back down to the back side of it. That means you could get a pretty good retrace. And that is sort of what's taking place here. And so there's the risk on the large caps that you could get that kind of a retrace. Now, when you take a look at the weekly chart, here you actually have a bearish retest regenerate. And we're talking about this swing point low that was broken. You see how it goes all the way to the top of it. It came back within 6 bars, finds its way to the top, does a full retest, and now is trying to regenerate again to the downside. And so typically what happens is if you really are going to continue the trend, you'll bounce up, come up to that area, and then you'll try to regenerate. And so the danger on the longer term time frame here is for something like that to take place. Now, if we bring in the monthly chart and expand our view even more, there's a critical area here now with this swing point low, and you actually have another one over here, that if these break, right, you're going to get a trend change. And so far we haven't had that trend change. It's still holding up bullish on this time frame. And so that's the big picture. That's the big worry. If this starts to cascade, you could get that. Now, the other thing that you could see is you actually had an ABCD structure that completed. Now you're getting the bounce. Then the question is it going to set up another ABCD structure to the downside to break it all down, right, and to change the long-term trend to a sideways or potentially a bearish trend? So for now, still holding, but there is the risk on the table here for something in a bigger way to take place to the downside. If we move to the large cap, just the index of the 20 largest caps, you got the same sort of picture, swing point high there. You get over it, you come back into it, you're trying to do a full retest and regenerate. If we look at the broadest measure you're using the SPI, X, here you see the same sort of thing, swing point high, you get over it, come back into it, doing the same thing. The only chart that really looks any different is if you go to the small and mid-cap portion of the index. And when you look at it right on a daily chart, it's a very different picture, much stronger, but also is setting up the potential for something to the downside. And so, for example, we just got a break of a swing point low. And so now any kind of bounce is going to do a bearish retest regen into that area, which will give us some keys if this thing is really going to go higher or not. The risk here is that you've actually got a lot of swing points lined up together that if this starts to break things down, right, then you could get something larger. Now I would note that you actually have now this bearish retest regen, but if you expand it over, you can see that this is doing a bullish retest regenerate as well. So in other words, as it's coming back down, it's coming back into this swing point high, and as it comes back into it, that's trying to hold. Now it did get under it. The low over here was 222, and we closed it at 2170. So slightly under it. That means to me this week you want to see this thing get back up and over, and if it doesn't, then this whole range here potentially starts to break down, right? You kind of have this nested ranges, and as you can see, you're right at the lower boundary of that nested range. You don't want to see a market go sideways too long without continuing on, because if they do, they set up all those swing point lows that, if broken, can actually lead to something larger. If you pull this back and look at it on a larger term time frame, we've got it on the weekly here. You've been up here testing this swing point high, right? Trying to get over it. You got volume on it, and you can't get over it. Multiple times now test. This is trying to come back in. It's a failed test here, a failed test again. Now you're starting to get the pullback. The risk is that you get more pullback where that came from. If we push over and look at the sectors themselves, I want to turn your attention to the three strongest sectors that are out there and take a look at their charts. This is the industrial sector. As it's pushing up here, if we pull it back and look at it on a weekly, this one's actually broken over a swing point high. And so you can kind of see the real strength that's taking place here as it gets over this high. Now, the bad thing is that it's coming into the top of the breakdown bar. This is the breakdown bar. As you come into that area, that becomes a tough area to go over, especially when you've had just a continual run straight up off the bottom. So even though you're getting the nice push here, this has set up, if you look at the volumes here and what you're coming into, this is set up now to where this is kind of the boundary. This is the make or break, if you will, for this chart. All these folks back here are in a losing position, and they're going to want to sell into the strength here. Everybody always wants to get even. So that's the industrial sector. And let's go, I think I actually misspoke. Consumer services is what I meant in terms of people rotating to safety. The service sector, you can see this big spike up as it broke over this area, gets a nice big spike up. Now it's drifting back in. That's going to be a retest regen on the daily, but if you bring it to the weekly hasn't been retested yet. Top there was 1707. That low on the bar after the breakout didn't get to it. And so that would be the first retest and potential regenerate off that breakout if it comes straight back into it. It would be within 6 bars, so your probabilities are not going to be nearly as high as they would if it was more than 6 bars. But at the same time, you got a nice breakout here. This thing probably will hold on this first pullback, even if it is within 6 bars. And finally, if we go to the sector that's really been on fire, it's the utilities. This is definitely safety. You can't get any money in the bank. You might as well put it in dividend-paying stocks. If you look at the utilities, nice big run up. It's over the highs, pushing over those. And if you go to the monthly, you can see a big rounding bottom starting to take place, and it's just trying to break over the high, and volumes coming into it. This sector looks like it's going to continue to run, and not a bad sector to be looking at. If we go to the 3 weakest ones, technology is one of them, starting to come off, breaks 3 swing point lows on this push down. If you bring it to a weekly, there's no swing point lows yet, but it is coming down. It's coming down with volume, And finally, if you go to the monthly, this thing's been strong as a bull for a long time. Now it's starting to get really choppy up here at this area. Another sector that's been hit was the healthcare sector we were talking about early when we were looking at the stats. So you got a big push up, got up to the swing point highs. Now those swing point highs really is just one here. You haven't even gotten back to the breakdown area. And on a monthly, you can see this one's already broken on a monthly time frame, transitioned from bullish to sideways. And so that sector is certainly under distribution at this point. And finally, the sector that's been hit the hardest is finance, 14% on the year down. A nice big spike up over the last few weeks off those February lows. You come off the February lows, get another spike down. Now you're pushing back up again. You're back up into that area. But if you pull this back, right, this thing is just chopping around at substantial discounts to what it used to trade at. Also, 2 months ago, traded down, broke a swing point low. So at this point, you've got some serious distribution taking place on the long-term time frame. That makes this market pretty dangerous. And that's what I've been talking about for a while. Your small caps are holding it up. That's where the risk has been taken. Utilities getting a good push, but outside of that, not much happening. If we go back and ask ourselves, what should we expect this week? It looks like more of a coin toss than a big tell, because you've got some factors working on both sides of this. You have the retest going on the monthly charts. Excuse me, on the short-term time frame charts. But on the longer-term time frame charts, you've actually got some decent action coming back up, trying to break out of this bearish retest region. So, it's not surprising you get the pullback there. The question is are you going to set up some sort of a ABCD structure to the top side, or are you actually going to get something more to the downside? And, we could see a little bit of weakness to start the week, but it does look to me like these are probably going to hold on this first test and turn around by the end of the week and push back higher. So that's where we're at. Thanks for joining me as always. Have a great one. I'll see you next.